Today's video is quite special because we're covering a stock that one of my viewers suggested, Capital Southwest Corporation, ticker symbol CSWC. It's always exciting to dive into your recommendations. And if there are other stocks you're curious about and want to see an analysis of, let me know in the comments below. If you're tuning in for the first time, I'm all about sharing simple and effective investment strategies, especially focusing on building wealth through dividend investing. Let's get right into it. Capital Southwest Corporation is a business development company or BDC with a focus on credit, private equity, and venture capital investments. They primarily invest in middle-market companies, covering mezzanine, later-stage, mature, and growth capital investments. As an internally managed BDC, Capital Southwest is dedicated to supporting the growth of companies across various capital structures. Since its inception, the company has invested in over 285 companies, providing funds for acquisition or growth. Founded in 1961, Capital Southwest has a rich history and became regulated as a BDC in 1988, making it one of the oldest BDCs in operation. Notably, Capital Southwest stands out for its exceptional performance, ranking as one of the highest-yielding stocks over the past decade. The company's stock is renowned for its attractive features such as special dividends and long-term share price growth. Before 2015, Capital Southwest functioned differently from typical BDCs. The company primarily held equity investments that did not yield dividends, resulting in minimal distributions before 2015. Over half of their portfolio consisted of two high-performing equity investments. In 2015, a strategic transformation took place. With most investments in the industrial sector, Capital Southwest spun off these industrial holdings into a new entity named CSW Industrials with the ticker symbol CSWI. This spin-off allowed Capital Southwest to adopt a more income-oriented strategy, aligning with typical BDC dividend practices. Currently, 89% of Capital Southwest's investments are in interest-bearing debt, while 11% are in equity investments. This shift reflects the company's evolved approach to investment and income generation. One of the standout features of the stock is its exceptional dividend performance. Since adopting a new business model in early 2016, the company has consistently maintained or increased its regular base dividend. Additionally, they distribute substantial supplemental and special dividends. Although these dividends fluctuate from quarter to quarter, the base dividend, highlighted in blue on their recent bar chart presentation, has remained uncut. Since December 2015, the cumulative pre-tax interest income coverage stands at 109%, with a dividend coverage of 112% in the past 12 months. Among the business development companies I've encountered, this one seems unique in its ability to distribute large, regular, and special dividends consistently. While many BDCs have issued larger supplemental dividends in the current high-interest rate environment, none seem to match Capital Southwest in terms of the dividend amount. This year, their stock has impressively risen by 36%, potentially leading the BDC sector. In contrast, the S&P BDC index has increased by only 14% over the same period, underscoring Capital Southwest's standout performance. Over the long term, the company has significantly grown its share price, a feat not commonly seen in most BDCs. In terms of overall performance, the stock has delivered remarkable returns to its shareholders. While Capital Southwest's past performance is impressive, it's crucial to consider their future prospects by examining their investment portfolio. Currently, they have $1.4 billion invested across various holdings, with a majority in first lien debt. This investment scale positions them as one of the smaller BDCs. Their portfolio includes 8.9% in equity securities, 2.7% in second lien debt, and 4% in a unique entity known as I-45 SLF. Their well-diversified portfolio is evident as no single sector comprises more than 13% of their investments, showcasing their strategic diversification. I-45 SLF, launched in 2015 by Capital Southwest, is a senior loan fund primarily composed of 95% first lien debt and 5% in other investment types. This fund is co-managed with Main Street Capital, ticker symbol MAIN, a highly regarded company in the sector of which I am also a shareholder. Capital Southwest partnered with Main Street to utilize their robust senior loan origination platform, while Main Street benefits from their combined credit expertise to generate attractive risk-adjusted returns. This partnership is somewhat unique in the industry and presents an interesting dynamic in the BDC space. I have a few reservations about this company, similar to concerns often raised about business development companies. A critical financial indicator for BDCs is their net asset value, or NAV in short, also known as the book value on their balance sheet. This metric essentially reflects the total value of a BDC's portfolio, with its share price generally aligning with the NAV per share. While the NAVs of most BDCs, and consequently their share prices, tend to be stable over time, some, like CSWC and Main Street Capital, have successfully increased their NAVs by investing more in equity securities. Unlike Main Street Capital, Capital Southwest's book value per share has been relatively stagnant over several quarters. This doesn't necessarily signal trouble, but it could imply that their remarkable growth over the years might slow down if they can't increase this value. However, compared to other BDCs, they have been performing relatively well, so this concern isn't too pressing. Another point to consider is that CSWC is currently overvalued by standard BDC metrics. This trend is not unusual for companies like CSWC and Main Street Capital, given their historical performance. The market tends to value their stocks at a premium, making them seldom trade at a discount except in situations like the COVID market crash. Therefore, if you're searching for an undervalued stock, CSWC might not fit the bill. Nonetheless, given the impressive returns of the stock, paying a premium might be justifiable, though this is subject to individual perspectives on investment value. In conclusion, Capital Southwest stands out as a business development company with a long-standing record of exceptional performance. As things stand, they maintain robust dividend coverage and continue to distribute significant extra dividends. The hope is that they will sustain this trend of business growth into the future. This concludes our in-depth look at Capital Southwest Corporation. Thank you for tuning in. If this video was informative and you're interested in high-yield investment strategies, don't forget to like and subscribe. Until our next video, stay safe and happy investing.